Well, Bitcoin is now knocking on the door of 100K yet again, and this is exactly what I've been preparing all of us for over here on this channel. When Bitcoin pulled back to around the 75K area, I was screaming the final phase of the crypto cycle is coming. And now we're here. The question isn't just will we break the high, it's what's happening behind the scenes while everyone else is focused just on the price. Because something big is unfolding under the surface, and I don't think most people are ready for it. But you're here and you're watching this channel, and because of that, today we're going to get ready for it together. Now, if you're new here, welcome. If you're returning, welcome back. I'm Annie, and this is Trade Travel Chill, your home of Zen style trading, apparently. Be sure to hit that like button nice and early for the YouTube algorithm. It's a great way to show support for the channel, and subscribe if you're not already subscribed to stay up to date with my market updates. So let's start with what everyone has been watching, the FOMC meeting last night. The Fed left rates on hold at 4.25 to 4.5%. That wasn't a surprise, but what was more telling was Powell's tone. He openly acknowledged that the risk to the US economy has increased, especially because of the new tariffs. He said inflation progress could stall, unemployment might rise, and the Fed may not be able to prevent those effects in the short term. That's not what you want to hear in the late stages of a bull market. But here's the interesting part. Despite that, the markets, after a brief dip yesterday, turned quite green pretty fast today. The Nasdaq, the S&P, and even Bitcoin all green. Why? Well, Trump teased an announcement earlier today. It looks to be a Medicare drug pricing overhaul. He's planning to revive the most favored nation model, tying US drug costs to lower international prices. But here's another clue. This chart right here displays the put-call ratio for equities and indices. It measures how many puts are being bought versus calls, and it just dropped below the 0.8 area. So what does that mean, and why is it significant? Let me explain it to you. A low PCR means traders, mostly retail traders, are loading up on call options, betting on the upside. Historically, when this number drops below 0.8, it signals euphoria or overconfidence. So how this chart works is a high PCR, typically above 1, signals bearish sentiment, more puts than calls. A low PCR often reflects bullish sentiment, meaning more calls than puts. Now, when we have a look just over the last couple of days, this was the high here, and this candle here low is all the way down here. That's a 37% drop, and to where it is currently is a 17% drop. This means there's been notable increase in call buying versus put buying, suggesting growing bullish sentiment. Now, here's the thing. If this continues to drop below the 0.7, it could be a warning sign of overconfidence, especially if price is rising without volume or fundamentals. So what is this chart telling us? This isn't just cautious optimism. This is YOLO call buying. Meanwhile, the Fed just told us risk is rising. Something's just not adding up. Now, here's where it gets really interesting. Retail investors, according to Bank of America, have just completed their 21st straight week of net buying US stocks. That's the longest streak in history. For context, the last record was 10 weeks right before the 2022 bear market. Now let's compare that to hedge funds. Real-time data shows hedge funds are mostly short on US equities since that same bear market. So while retail is piling in, hedge funds are quietly stepping back and even shorting the rally. And this isn't me fear-mongering. This is literally data from 5 trillion in hedge fund AUM. So if I'm not being clear, what you're seeing is a classic divergence between dumb money and smart money positioning. And historically, this level of retail buying is often late cycle behavior. Now, remember when I told you at 75K that this was the last phase of the cycle? What happens in the last phase of the cycle? Retail FOMO. Now, don't worry, this goes on for a while. It's bullish before it's bearish, but you want to be out before it becomes bearish. So let's add in one more layer of caution. Even though Bitcoin is pressing up towards 100K. The Nasdaq and the S&P have not yet made higher highs. They're looking quite good. It does look like both of them want to break through the current range, but it's not quite there yet. So you have to be prepared that if they roll over from here, and hedge funds seem to think they will, Bitcoin is not immune. It could be dragged down with them. And if you're holding illiquid altcoins, well, you're at even higher risk. But let's take a look at the S&P chart a little bit more clearly. I'm not going to go into huge detail on this because I did do it on my very last update, but I just want to show you that since that update, basically nothing has changed. I talked about this area of interest and our absolute need for us to break right through it to get above this area here to create a higher high if we're going to see continued upside. Right now, it looks like we're ranging within that area of interest. That's fine. It's allowed to consolidate here, but if it does, we want to see it break out to the upside next. This being a daily chart, of course, it's going to take time for it to do that, but it is something you want to monitor regularly. The same thing goes for the Nasdaq. Looks like it's consolidating around the EMAs. Good sign, but we want to see this actually push up into our area of interest, because if it can do that, then it's going to create the higher high. So let's talk about what this means for Bitcoin. This is the same daily chart I've been showing for a while, and this is the region that I've mentioned that we want to break through if we think we're going to see further upside. That range is where the price is entering currently, and it was between about 98 to about 102. So we're kind of in the halfway point of that range. We don't have any strong rejections so far, so that's a really good sign. And actually, I really do like Bitcoin on the 4-hour chart currently, because the levels that I use in my trading strategy are very, very clear here on the 4-hour. You can very easily see the W formation that happened at the 75K area that broke out into our level 1 rise. We went into consolidation from there. After the consolidation, you expected level 2 rise, again, consolidation again, and that should mean that there should be one more rise to go, which looks like what we're seeing today. Now, what I like about this area in particular is that when I add the highest levels of liquidity, I can see that when you have a look at these numbers here, you can see that the liquidations below the current price and that are within the level 3 range, they're around the $450 million region. Those are the highest ones. There are a lot more, but to keep the chart simple, I only add the highest levels of liquidity above and below price. So above and below price, the highest levels of liquidity coming in is around 443 million at these two levels. And when you have a look above price, the highest level is around the 139 million. That means that people aren't really massively shorting this right now, but they are massively buying into it, and they're buying at level 3. And what does that mean? That is the late stage buying. When late stage buying happens, we tend to eventually see a reversal. So if you are in a long position, this is your hint to start at very least taking some profit. Worst case scenario, you move your stop loss up. You can see here's an example of a stop loss. You move it up under the range, therefore you're free of stop hunts, but you can also let the trade ride whilst protecting the profit that you've made so far. So now that we are in this liquidation range right here, for me, the thing that I'm watching is how price reacts as it moves further and further into it. So far, I don't have a reason to close my long. It's looking fine currently, but this is the range where I then start to drop down to smaller timeframes to look of early signs of topping out or potential reversals even. Now, there is one thing to be cautious of today, because we do have unemployment claims coming out that can cause a reversal if the news is not great. By the time this video comes out, that may already be out, but that is one time that I'm going to be looking for any signs of reversal. And if not, knowing that tomorrow is Friday, that is the day that the market makers set the weekend trap to trap retail traders. So if we continue our uptrend today, tomorrow is another very important day to be looking for reversals to give you a hint to take your profit, or like I said earlier, at the very least, tighten your stop losses to protect your profit so far. Now, this long, I'm still holding since the 75 75K region. I took this as the final phase trade, and I actually took this on the Bitget exchange. And the reason why I chose this exchange is because of this amazing feature here, which is called CoinM Futures. So if you don't know about it, CoinM Futures is amazing because it allows you to use Bitcoin as the collateral for your leverage trade, as opposed to most other futures products where you're only using USDT as the collateral. So why do I want to use Bitcoin? Because it allows me to exploit the percentage gains of alts when they're more explosive than Bitcoin, but it also allows me to exploit Bitcoin as well, whether it's long or short. And when I take my profits, I'm accumulating more Bitcoin. So in a bull market, not only do I want to take leverage trades to make more money, I want to take leverage trades to make more Bitcoin. So by the time I take profit, not only is the price of Bitcoin higher, but I also now have more Bitcoin. It's a pretty amazing way to trade if you understand it. And especially right now when USD is bearish, USDT is pegged to US dollar. So why do we want to be accumulating more USDT? It doesn't really make sense. I personally rather accumulate Bitcoin right now than USDT, and that's what these contracts allow me to do. So if you want to trade that way, there is an exclusive link in the description of this video that gives you 20% rebate off all of your trading fees for life, and that is only available if you join Bitget through the link in the description of this video. So there you go. I've just made you more Bitcoin and I'm saving you in fees to do it. What more could you ask for? All I ask in return is that you like or comment on the video to help us get views, and using our links also helps to support the channel. Okay, so I now want to talk to you about why that 75K region was so important to me and why it was a good area to spot buy as well as take the next leverage play. And I am of course talking about the hash ribbons. Now back in March over here, you can see they flashed a buy signal. Now the way that I personally use this is not to buy on the buy signal. I actually wait for these green zones here that signal capitulation, and I start slowly buying over time when I see that capitulation in anticipation of the buy signal coming next. This has been historically a very, very good area to dollar cost average into Bitcoin. If we zoom out over time, you can see here we had this capitulation, which was in this whole range. We got the buy signal with the final spike down, and then we headed up into the 103K region. Got another one here, same thing, could have been buying at the end of this range through here before the move to the upside. Previously in 2023, capitulation again whilst ranging, dollar cost average without fear, had a move to the upside. And even here at the bottom of the last bear market, capitulation, buy range, move to the upside. There's plenty more. This goes on throughout all the cycles of Bitcoin. It has generally been a really good time to dollar cost average, but also using in combination with this your own technical analysis strategy. It's been a good time to also get leverage long positions. So for me, that was the last buying area for the cycle for me personally for Bitcoin, because using my trading strategy, I believe we're in the final phase. And having that capitulation and buy signal show up around here just added confluence to my technical analysis and made it worth me taking a chance. And so hopefully you were around watching our videos around that time. If so, you would be nicely positioned currently expecting further upside. But that is now done. So you probably don't care anymore. You're like, okay, I can't go back in time and take advantage of that. So what use is it to me? I understand that. So now we're moving into a different mode. That was the perfect buying mode. But now we are not in buying mode. We should be in take profit mode. And the indicator that you should now be watching every single week for that take profit mode is the pi cycle top. So again, because we're trying to time the top of the cycle, which obviously you can't get it exact, but we're trying to get close enough, we want to be using this on a macro time frame. So you really only want to be looking at it on the daily time frame. The combination of the hash ribbons along with the pi cycle top is probably the easiest strategy you could do if you just wanted to get into Bitcoin somewhere around the bottom of the bear market and take profits somewhere at the top. It's the easiest thing that you can do. You can see here in 2021, 𝗏𝗃 basically marked the top of that cycle. Yes, we repeated the level, but we didn't even break it by much. If you got out then and that was it for you, you wouldn't be crying about this little bit higher that it went. So that was a perfect call right there. And even when we go back to the 2017 cycle, you can see it gave the perfect call at around 20K as well. Now, when we look at the price currently, it has not flashed yet. So we're kind of okay for now, but it does mean because we're in the final phase of the cycle, it is something that you want to add to your charts, and it's something that you want to be checking on the daily time frame as part of like your weekly process. Make it your weekly open process every Sunday, Monday, whenever you do your first charts of the week, go and have a look at the 𝗏𝗃. Now, in addition to that, you can also use this, which is pretty interesting, from CoinGlass. It's the bull market peak signal, and it basically marks out a bunch of different metrics that people use to decide whether or not we're getting close enough to the cycle top. Now, at this point in time, absolutely none of these metrics have fired, like not even one. So that's a good sign, and it's basically saying we are at 100% hold right now. That's a pretty good bullish sign. Now, this is exactly the kind of stuff that we break down inside of our TTC community. We host multiple live Zooms every day. We walk through market structure, key indicators, mindset, because in this phase of the cycle, you really do require clarity. So if you've been learning from these videos on this channel and you're ready to go a bit deeper, you can check out the link below and come join us over in the private community. Okay, now look, I have one more really important thing to tell you. If you're relying on me or any other crypto influencer to tell you where the exact top is, it's not going to happen. The exact top is literally everyone's guess at best, and some guesses will happen and those traders will say that they called it, and others won't and they'll pretend that they never said it. I keep spilling the same message on this channel because I know that no one can call it exact, and that message is take profit slowly on the way up. It's the only way to lock in gains and to keep them long term. My goal here on this channel is simply to tell you what the data is whispering. And right now, what I've shown you in this video is that retail is euphoric, hedge funds are short, Fed is warning of risk, and everyone is cheering for higher prices. That, my friends, is not the time to blindly buy more. That is the time to zoom out, revisit your plan, and protect what you've earned, because historically this level of retail buying is often late cycle behavior, and you're seeing a classic divergence between dumb money and smart money positioning. But don't worry, it's not all doom and gloom, and I also want to leave you with this. It is possible that Bitcoin could hold strong even if US equities roll over. Yeah, it's possible. Is it probable? Not at this point, because historically Bitcoin has dumped alongside tech stocks. But this cycle could offer a new scenario. If inflation remains sticky, if the US dollar continues to weaken, if the global demand, especially from Asia, stays strong, and if people start to see Bitcoin less like a tech play and more like digital gold, then we could see Bitcoin decouple. I mean, I think it's every Bitcoin maxi's dream for Bitcoin to decouple. We could see it hold up or even thrive while hedge funds stay short and equities cool off. Like, that would be best case scenario. But that doesn't mean we throw caution out the window. All it simply means is that for this reason, it's worth keeping some skin in the game, but not your whole body, okay? So take this time to plan, think in probabilities, and remember the goal isn't to just make money in the bull market, it's to keep it, scale it, and exit with freedom.